Hi, I'm Nicholas Anderman, and I'm joined today by Oliver Cornock, the Middle East Regional Editor at Oxford Business Group. We're here to discuss Oman's recent economic development and investment opportunities. Good afternoon, Ollie.
Good afternoon, Nick.
Perhaps you could start by telling us where you think Oman fits into the broader Gulf region at the moment.
Well, of course, Oman is part of the Gulf Cooperation Council, the six-member state body. But Oman's history is very long. It's got a very long trading history, a long culture, a long mercantile culture. Strategically located at that bottom tip of the Arabian Peninsula, Oman sits on the globe's big trade routes, has strategically important ports. Indeed, it's developing new ports, a point that I think we'll come on to discuss later. But the broader economy is characterised by not being quite so well endowed with hydrocarbons as some of its other Gulf neighbours. And this has meant that Oman has concentrated on diversifying its economy rather sooner and earlier than some of its neighbouring countries have done. It's also meant, just as an aside, that because that oil, those hydrocarbons are harder to get at, Oman's become a real specialist at enhanced oil recovery, something it's really championed. But Oman's economy is really characterised by being slightly steadier than some of its other Gulf neighbours as well. Now, this is not a negative thing in my mind. It's meant that during the boom times, Oman didn't grow quite at the same pace as some of its other regional counterparts. At the same time, neither did it have some of the drops in income. And so that really has meant that Oman has posted growth of about an average 5% per year, which actually is very strong, and in terms of a global perspective, very, very good indeed.
To follow up on your point about the steadiness of the economy, do you mean that they've pursued a conservative policy, would you say?
Well, in some ways, yes, I think that's correct. If you look at its fiscal and monetary policy, yes, it is conservative. This is characterised particularly, for example, by the Central Bank of Oman's approach to Islamic finance. Islamic finance wasn't permitted until about 18 months ago, when the rest of the Gulf, the rest of the Middle East, and indeed Asian economies were really embracing that. And this was really born out of a feeling that they wanted to look at how other economies were managing their Islamic financial services sector, learn from that. And I think that's a really important reflection of the Omani attitude to doing business, economic development, etc. More broadly, though, Oman's economic development is focused on organic growth, trying to develop the Omani economy by Omanis for Omanis. And I think, again, that's a strong characteristic. That's also seconded by a recent programme, the In-Country Value programme, which is something that the government are going very strong on at the moment. And that is looking to retain, instead of out-tender, about $64 billion worth of economic activity over the next 6-7 years to 2020.
So in that context, what sectors does OBG identify as being particularly ripe for investment at the moment?
Well, Nick, it's very difficult to highlight any one area of the economy. Sure. As with all developing economies, there's myriad opportunity. This growth is leading to opportunities in every sector. But I suppose if I had to choose a couple, the first might be supply chain and logistics. You only need to look at the developments in the port sector in Oman, at Sur, Duqm, both new ports, but also the older ports of Soha and Salalah. We're seeing an infrastructure being built around a huge level, a huge volume, a huge capacity of input and export. Then you couple that with a very rapidly developing road system, and yet further with airports. There are 5 new airports under construction in Oman. The existing airports at Salalah and Muscat are both seeing massive expansion projects as well. And then finally add into that the GCC-wide network, of the rail network that's being developed. You suddenly see a picture where, because of Oman's strategic location, it is ideally suited to act as a transshipment hub, an import-export hub, for all manner of goods. Also, given its hugely long border with Saudi Arabia, it's got very good access straight into that economic powerhouse of the region, Saudi. So I think that's a very important area, and anybody involved with downstream logistics, supply chain, manufacturing, things like that, will see huge opportunity in the Omani market.
A real emphasis on transport infrastructure then.
Absolutely, Nick. Of course, the Omani government has recognised early on, again from the mistakes seen elsewhere in developing economies, that without adequate transport infrastructure you can have as much industrialisation, as much manufacturing as you want. If you can't get your goods to export easily, efficiently, you're losing out. And so yes, it has been a real emphasis for the government. The second point, I suppose, is tourism. Oman sees about 2.1 million tourists a year at the moment, which is a massive increase on what it has had historically, but that's all pegged for much greater growth. Over the next 7-8 years, the Omani government are looking at tourism contributing about 3% to GDP, which is a significant proportion from where we are at the moment. Now, what does that mean for an investor? Well, that means that there's huge opportunity because there is a lack of capacity at the moment. There are some 54 hotels being developed as we speak at the moment this year. There were 23 developed last year. That's a huge amount of capacity coming onto the market. So all the ancillary, all the related areas of tourism, hospitality are being serviced. And again, that offers huge opportunity.
We often hear about quotas in the Gulf. Is this something that Oman has implemented? And if so, what does it mean for businesses looking to set up shop in the country?
Absolutely, Nick. It's something that all investors into Oman need to think about very carefully. In Oman, there are quotas and they vary between sector. If we look, for example, at the construction sector, there is the 30% quota for Omanis, nationals in that sector. Now, this is something that all employers, all companies operating in the sector understand. The people that we speak to recognise this as being very, very important, and they're very willing to play their part in that. However, they're very keen to point out as well that it's not easy. Not because they don't want to employ Omanis, but because actually some nationals don't have the skills suited to that sector. And therefore, again, there's opportunity with that. So at the moment, there is an impact, yes, on the bottom line. It can be expensive for companies, but it's quite short-lived because that skill transfer that takes place means that very rapidly you have a workforce, an Omani workforce, that is able to do the job. And I suppose secondary to that is the growth in the opportunities in the education sector, particularly the vocational sector, where we see a much greater emphasis, again, looking at the tourism sector, to train people up to work in the hospitality sector, an industry at the moment that's not particularly attractive to Omanis. So it's not going to be an overnight change. There will be a mindset shift required, but it's something that's happening. And again, for foreign investors, it presents opportunity as well.
Very good. Can you explain a little bit about Oman's global trade footprint?
Absolutely. Oman, as a member state of the Gulf Cooperation Council, enjoys all the benefits of that trade bloc. So free movement of goods, free movement of people. That equates to about 3 billion Omani riyals in exports a year. Quite significant. And of course, that's all set to grow as the GCC customs union begins to take effect as well. That's something that's happening as we speak. Perhaps slower than member states would like, but it is happening. The GCC itself has a number of free trade agreements, not least with Singapore, Australia and New Zealand. And again, the benefits of that are very obvious. Oman has a bilateral free trade agreement with the United States, which has proven to be very, very effective since it came into force in 2009. We've seen about a 60% increase in exports into the US from Oman, and in the reverse about 25%. So not quite the same level, but it's growing and it's all moving in the right direction.
Sure.
The big elephant in the room, of course, is the EU-GCC free trade agreement, which is being negotiated at the moment. And again, that will open up a whole new level of trade, hopefully, and something that the GCC is working very hard towards achieving. And finally, Oman is a very active member of the World Trade Organization, a signatory to all of that entails, and therefore people can expect not only a secure trading environment, but also Oman is afforded protection by that membership too.
Presumably, given Oman's strategic location, the country is also looking towards Asian markets.
Absolutely, Nick. Very important are they too. Indeed, Oman is the second largest investor from the GCC into India. There is in fact a new shipping line, an express shipping line being set up between Salalah, the port in the south of Oman, and India. So it's already very much in focus. But more broadly, of course, the other Asian economies are all playing their part too. In addition to the Asian markets, Oman's also looking to expand its share of non-oil exports to Africa. They've set a target of 15% growth, which is quite significant from when you consider where the starting base is. And they're in areas like steel, food, polymers, plastics, things like that, non-oil exports. So very important markets and born out of that traditional relationship with East Africa.
Excellent. Thank you very much, Oliver.
Thank you, Nick.
For more expert analysis on Oman and over 30 other markets, please visit our website.